Everybody. Thank you for returning to the channel. I appreciate you guys' support. Let's get into this next video here on technical and fundamental analysis. So, what is technical analysis, right? TA. Well, that's most commonly price action, support, and resistance. This is a very advanced term. There's very many advanced forms of price action, and there's very many advanced forms of support and resistance. But they correlate around the same ideas. So, let's see. What I have here for you is the NASDAQ, and we're just going to go ahead and outline some price action here. Okay, so let's zoom in. This is the 1 hour chart. So this is price action. We have a low here, to a high, to a higher low, to a higher high, to a higher low, to a higher, that's not the high there. Let's say there, to a higher high, to a higher low, and let's get this back out here. To a higher high, to a higher low. Okay, and if we just go ahead and we outline that, connect the dots, you are going to start to realize a similar thing taking place. You are seeing that the highs and the lows creating a similar pattern, from a low to a high, to a higher low, to a higher high, to a higher low, to a higher high, to a higher low, to a higher high, to a higher low. And as you can see, this price action continued up above these highs here. So what's interesting here is that we begin to notice that the highs here that are established, right, becomes what is commonly known as support. Right? And because it's support, we're expecting buying to take place off of this level. So let's go ahead and mark it green. This is our support level based on price action. Right? And this right here, is our protected low. Right? Now this is our protected low. Let me go ahead and flip this. Since this is our protected low, we don't want to see the market retrace to this area, right, inside of this trend. So we see that the market then pulls up, right, and it pulls up to go back down. Okay, and then you can see here they established in the market, right, this market structure. They've developed this support, and so the market then rallied out of that area. Then they had a little pullback, ran up again very slowly, pulled back strong, and then shot up very strongly. So they just ultimately continued this trend here. If we go ahead and take a look, that was our support level, that was our protected low, and then we go ahead and we draw out this level here. Well, let's use this here first since it's already red. This is now our next protected low. Sometimes the market will come down and sweep, kind of like how it did here. First came up and then it came back down to sweep. But once it's established this strong move up above, we know for sure that this is a protected low inside of the price action. So if we go ahead and we mark our support, right, you can clearly see that the market continued to respect this theology of price action, right? And so this can be taking place on all the time frames, and there's many advanced forms of this, and there's all kinds of ways to develop entries and models, which we'll be getting into this channel. And this is just the very beginning, and I'm excited. But you can see for yourself how the price action here took place, right? And that even goes for the selling side here. So just an overall picture. This is a little swampy, but you can see. Let's go ahead and mark this. So this low, right? Once the market broke down strongly past it, right, became resistance. And that resistance then moved, the price action here then moved price down even further, right? You can tell this market here wanted to reverse. It was ending this bullish market here and entering a bearish market. And then you can go ahead and see that when they broke past it and swept back up, right? So let's go ahead and mark this. This is our protected high. Where did we go? And then we can then go ahead and mark this one here. I don't have to name it. We get the idea. And another resistance here. So you can see that the price action worked out right here. Just go ahead and move that right there. There we go. So that resistance developed here, played there. And you can say that why didn't this protected high remain intact after the market moved lower, right? And there's an explanation for that, but it's too complicated to put into something that's just introductory into an overall concept overall. Because, if you also look at it like this is a ranging market. The market is rebalancing, many people will say, and then it actually displaces, and you can see that the price action there played. So this is where the market bottomed out, right? This is the origin right here, this point. This move up, all right? They double bottomed up. They came beneath that, rallied out of that same area again. They were trying to establish this area as support, right? But ultimately, that goes into the support and resistance category with price action. You can see that the support that they tried to build inside of this consolidation, okay, this support eventually turned into a resistance, right, where the market fell even further from it. And you can see that this level plays again in the future. So you can see that this level is played several times, and this is support here, and then it's a resistance here, and then it looks like it turns like a support here. And then look at this, another resistance. So you can see that even lines up with its protected high here, right? So that resistance was in line with an overall market narrative, and that would have been a nice play right there, price action wise, and that's why the market had such a sharp reaction there. And yeah, that's support resistance. You can see that the price action here, if we take a look at it on a bigger scale here, why don't we just do this like that? Whoops. yeah, if you take a look at it like this. And then, of course, you can always connect the dots. This helps you give a sense, though, overall of like where the market is going. And so our goal is to follow this trend every single time by reading the price action inside of that trend. So let's keep moving on here. So what are technical analysis tools and indicators? So this is pretty cool as well. So there's this indicators button right here, and there are different types of technicals that you can use. There's even strategies that people have programmed inside of TradingView, which is very cool, right? But let's give you a taste of some of the basics, which we'll dive a little bit more into later. But let's just get you aware of them. So this is a really good one right here. I like the divergence indicator here. This is good. Okay. So we can see that this indicator chart, there we go. We can see that this indicator chart here gives us an indication, right? So we see that there is a divergence that took place here, and so it's calling a bull, it's calling a bull market, and it's calling a bull market, let's see here, the first tap here. So it called the bull market here, right? Not very accurate. If we look at it, it called the bull market here, right? And we can see price dropped heavily before it even began making its move up. So that's one way to see it. There is another overall divergence here. I'm pretty sure like on a different time frame with a different close and whatnot. A lot of people don't really manipulate with the and test with the numbers, and so that's why this is like kind of nonsense to me. Nobody really actually tries to test and you know have specifics. It's kind of just patterns, and then they just try to simplify it to as simple as it can be, and then that's it for them. If it works, that's beautiful. But for me, I mostly see these as confirmation tools, not to be used as signals. So yeah, this is just one example. There are thousands here on TradingView. Um, there's even the moving average, very common. It's just a moving support and resistance line as people make it out to be. So you can see here that the market was moving up. You can see that the blue line was moving with the market here. So you can see it was support, and then it was temporarily resistance, and then it became support again, right? They tried to make it resistance and failed, support, tried to make it resistance and failed, support, tried to make it resistance and failed. You can see that's just every single time the market's doing that, it's just rebalancing as it's following its trend upwards, right? So this is one of the big favorites of a lot of traders, that 9 and 18 moving average on the daily, and then the 50 and the 200 moving average on the daily charts are good signals. Many traders swear by it. I used to swear by it myself, but now I trade purely on price action. I trade purely on advanced price action. So let's get a move on with this here. So what are technical analysis strategies? So strategies are just a piece inside of something bigger, but it's basically a technical approach, right? You finding an edge in the market that benefits you. So what I commonly like to say that the strategies are a part of your trading model, okay? Your trading model. So if we take a good example here from the great mentor Michael Joe Huddlestone, ICT. I just went ahead and back tested a trade he had posted and stuff, and I can just say that this is probably the best way I can give an example of an advanced model. And so here we are. So we can see here that right? If we zoom out quite a bit here. First, there's a sweep, and then we have the power of 3 from the weekly chart. We have price action from the weekly chart as well. So we can see that from those levels here, we see a sweep taking place, market structures breaking, keeping track of the structure breaks, following the price action, right? But basically, this is how it was broken down here. Let's go to the weekly. Right? You can see this big move up, and then boom, you can see that this candle body right here broke the structure downwards, this candle body right here. And then you can see that the market moved down a little bit further, created another break, and then, right, rallied back up to this initial point that created the break, right, inside of what ICT calls an order block. And if we break down and refine that order block, right, we start to see that inside of this drop here and this come back up, they created supply, right? And that supply again dropped again. That was the second observation. So they already pulled back into this displacement. They wanted to continue the trend lower. So with this low volume tacky retest and then supporting structure, we knew that this market wanted to reverse and follow the overall trend because you saw the weekly chart, it was very bearish. And so you can see here that if we take a look at that on the lower time frame, like the 4-hour, we start to notice a little bit more of a structural story, and we get a backing of our model checklists, and you can produce a nice, very efficient trade such as this one right here, where this is a 1 to 13 risk to reward ratio. Very strong, very powerful. You wouldn't have taken the trade in the first tap, but after the displacement, right, you start to see that yes, this is a valid point of interest, and then the second tap there, this is maybe a news event or something like that. You could join right with them, or you could wait for the change of character and look to join on the trend on the way down. Either way, you could establish a bias even if you don't establish an entry. This is very powerful analysis. Okay, so let's move on. So how do you read the chart? So you read the chart with candlesticks and price. So again, candlesticks, and right here on the side is price. Down here is time. Right down here is time. Okay. So what are candlesticks, right? Candlesticks are a reading of price. There's an open, a high, a low, and a close. So if we just go ahead and look at that, there is, for example, on an up day, right, a bullish market, a bull candle, right? The low of the day took place here. The market opened here. Market closed there, and market had a high in price there. So it opened at this price, and let's say it moved down to this low on this price, moved back up to a high in a price, and then moved back down to close that day at that price. So same thing with this bear candle. So the market opens, right? It moves up, it creates a high in price. And then the market moves down, creates a low in price. And then the market moves up to close the day, and that is the closing price. So bullish, open, close, and bearish, open, close. So what are candlestick patterns? A lot of people talk a lot about this. So these are used in combination with price action and support and resistance commonly. Well, they will be tracking the price action, support, and resistance, and then they will start observing the candlestick patterns taking place at these levels, which give them an indication and a signal of who is starting to regain control of the market. So if we just go ahead and take a look. So here's a very good resource right here. 6 bullish candlestick patterns. This is the hammer. The hammer candlestick pattern is formed of a short body with a long lower wick and is found at the bottom of a downward trend. So you can see right there, right? That's the hammer. You can see that is called the hammer because it looks like a hammer. So this is the signal to them that the potential direction is up. Here is an inverse hammer, right, where the buying pressure moved all the way up, but the selling pressure came a little bit back down. It's a potential signal that the buyers are ready to step in. There's a bullish engulfing. This is my favorite. Potential direction. You'll see that you'll come to see in time why this is everybody's favorite pattern. Here's another one, right? This one's commonly used in retail trading and smart money trading. This one's commonly used in smart money concepts. This one's commonly used for people trading on like the monthly, daily, and weekly time frames. This one's commonly used all the time. Same thing, right? Kind of like the bullish hammer. This is like a bearish hammer, or otherly known as a shooting star. This is another favorite for many smart money traders. This is a favorite for many smart money traders. This is a favorite for investors. Yep, and as you can see, there's just so many that you can learn that give you an indication of something. And all this knowledge is right in front of you. All you got to do is look for it. How can these candlestick patterns benefit you? Trading edge, pattern recognition. So you can start developing an edge, like I was saying, using these candlestick patterns in alignment with your price action and support and resistance, and you can get good entries and have good stop losses, and basically you can print a lot of money if you find your edge and you remain disciplined to it. So you have to find your procedure, you have to find your process, your system, your model, right? Your model is what's going to make you successful and have an edge over that market. So what is fundamental analysis? Well, fundamental analysis is, basically what's going on with the big money. The government has billions and billions, and that money is talked about, and what the government does is sensitive to the value of our money. So there is all this news regarding the whole world, and it's all available to us all the time. But it could be a lot to try to go through all this. And yeah, I'm pretty sure Bloomberg has a filter, but right here, their filter. However, I always preferred Forex Factory because you can always just get what you really want to know. So like I pick the high impact news, and you can always check the details. It gives you a quick overview. So that way, you get a little bit of insight without having to do too much work. Same thing here, and you can follow these forecasts. If you don't know how to read any of this information, trust me, I didn't know how to do any of it in the beginning either, but as you are trading these and paying attention to these news events, you start to see very common patterns, very common things take place. Like oftentimes, the news doesn't reverse a trend. It might reverse a 15-minute trend, but it's continuing the 4-hour trend. Many times you will see that with those kind of insights that you'll see, news events can make people a lot of money. So definitely something to be aware of. You don't ever want to get stuck in a market that's extremely volatile because of news and not even know it. Trust me, I've seen a lot of people lose a lot of money trying to trade news with confidence, risking 10%, 15%, and some people stupidly 100% of their equity and losing everything, but other people just losing big chunks of their account and regretting it later because they were getting greedy and they were trying to make 50% and 70% return, but instead lost 10%. So how do you basically navigate the chart time frame matrix? A lot of people have a lot of theories about this, but my favorite is kind of like how we broke it down here. It goes from the weekly to the daily to the 4-hour, and then we have narratives to follow and that we can break down into the 15-minute chart. And that's pretty awesome. So if we just do this real quick, if we just break down this narrative, we can go ahead and just scroll past all this. Let's get to the nitty gritty here. So after the market had already dropped, before it pulled back to our point of interest, where we would be looking for a trade, right? How could we know that we're in the pullback, right? So we're not expecting the pullback to end until what? Until we get to our point of interest. So if we just follow this real simply here, and let's get into the nitty gritty. All right. So you can see here that you want to like about 15 pips per pullback here. Just go ahead and grab the top to the bottom, right? You can see that's 67 pips right here. So 67 pips, that is definitely pullback, right? Strong pullback. All right, and then let's go ahead and again pull out this. What is this? That 23. It's a pullback. It's a pullback. It's a deep pullback right here too. So let's go ahead and delete that. All right. So this is choppy because this market is reversing, right? Let's take into account what's taking place here with this price action. So we got to remember now, the number one rule of trading is to follow the trend. And I don't know about you, but at the moment it's not very clear on which direction this market's going. So this wouldn't be a favorable time to trade. If you're seeing this kind of wonkiness, you want to see clean price action. So if we just take that into account there, that was pretty bad, right? But we can see that this market took a while to reverse itself. You can see that the market broke structure here to the upside. It pulled back. So let's go ahead and this point to this point in total, right? We can see it hit the 50% area, but in relativity to this area right here, right, we can see the market broke down, had a deep retracement, and then again started to move back up. So it looked like the market tried to make what? Resistance, right? And now we're starting to notice that that resistance that they established here once that resistance broke upwards, once price broke upwards through that resistance, check this out. It came back down and became support. And this is the first leg of our bullishness here. And this is the first higher low. So this would be my protected low here. Or if you see this aggressiveness like this, where the market came strongly up and breaking this resistance, commonly known for the breakout strategy traders, you can see that on the retest of the price action, right? It flies. And now you can see too that the candle body pattern is taking place. So you have a bullish reversal candle here, right? This is commonly known as a bullish pin bar, right? It's not a bullish hammer. This one's a bullish pin bar. Then you can see here that there's the engulfing candle. So altogether, right, that ignited the reversal. You can see here now, if you outline this reversal candle, that became support as well, because this is where the reversal originated from. You can see that when they came back down to the area, they rallied out of there. And you can see too that once they rallied out of there, they also were looking like they were making some pretty clean price action. Yeah, I mean, these are kind of like the ways that you just break things down, like if you're trying to navigate that chart matrix, like hey, like there's a coming to weekly point, but how do I know when it's going to stop? And you just break it down. You just break it down on a lower time frame. Like, okay, I can see this market starting to go bull. It's starting to go long. It's eventually, if you don't figure it out down here, you can figure it out like along these lines here and look just to join that trend. And you can see that the more obvious it became after all of this mess, how strongly the market reacted. And so we just have to be patient for the moments like these, that produce amazing results, and following the structural narrative along with our price action. So when people don't know how to break down one time frame to another, they get lost. It's because they're not paying attention to the higher time frames like the weekly and the daily, and then they can start looking to follow those sub trends within those 4-hour trends on the 15-minute chart. And that is where we get biases and we develop a strong directional sense, and we create day trades on the intraday time frames that produce big results. So that basically begs the question, though, is what type of trader are you? Some people are position traders. Well, they'll wait for a monthly or a weekly point of interest, and then they'll take a trade. There's swing traders who swing trade, off the daily and weekly levels. They will hold that position for weeks, months. You know, these people right here in the stock market make a killing. I'll tell you. So that can be applied to forex as well, and scalp traders. So this is really cool for a lot of people like Ricky Gutierrez. He's a scalp. I'm pretty sure he's an expert scalper because he can make a lot of money, and it's all just day trading. And yeah, I mean, scalp trading is like quick money, fast money. You're in and out in 15 minutes, and printing good results too with good risk to reward. Most of the time, very good, very decent. So you just kind of have to find out who you are. Are you looking to be, on the monthly and then the weekly and then the daily, or are you looking to be on the weekly to the daily to the 4 hours, right? Or are you looking to be on the daily to the 4 hours, right? To the, let's say, one. So, what are you? Are you going to be a position trader? Are you going to swing trade? Or are you going to try to scalp trade, where you're just trying to find points of interest intraday? And then a lot of people will even go and say, "Is this like this is scalp trading?" So like 4 hour, 1 hour, and then the 15 minutes. So what I'm trying to say though is when you navigate the chart time frame matrix, you're maintaining this mentality and this perspective while tracking and trading the market at this level. So you're developing a directional sense here, and then you're trading here. And that's how you day trade, and you trade on the lower time frames, and you print really good results. It's because you're following the overall structural narrative that has already been in place. So why is trading personal business? So brokers tell you what you want to hear and marketers sell you on the idea. And that's just the reality. You know, brokers will get you really excited and they'll push the bank's education on you. And marketers will sell you the idea that you're going to be rich and you're going to be, oh, you can make so much money, and they're really going to try to reel you in on the idea. But ultimately, none of that's really possible. Success in trading isn't possible unless you pursue core market knowledge. Again, I may have showed you guys a nice little intro here to like technical and fundamental analysis, which if you liked it, I'd appreciate if you gave me a thumbs up. And if you didn't find any value, I'd appreciate if you left in the comments some input for me so I can get a little bit better at this. But anyway, just pursue that core market knowledge. You will find your way to success, I promise you, just as I have. I kept pursuing, I kept investing in myself, and here I am today, excited and willing to share everything I've learned and start helping many other people in their trading journey and helping them get results. So if you found value in this video, please subscribe. For everybody who has returned, thank you so much. As always, peace, love, and harmony. And for everyone who is new, I love you as well, and I appreciate that you came. And if you did enjoy this video, I'd appreciate that you subscribed and hit that notifications bell because I have a whole lot more coming. All right. Peace, guys.